Hi, Kerry here with Best of Us Investors again. I did this video yesterday on investing in a bear market rally. I think we're in a bear market rally right now because the market wants to go up, but it has a lot of pressures that I think will then turn it around and take it back down and hopefully find the bottom. I even shared with you where I thought that bottom would be in the S&P 500 and the NASDAQ. So look at that video if you're interested in that information. Now what I want to do in this video is basically say, how am I going to make some money in this? And what I want to do is ride the market up, and I have some pretty sizable holdings in a number of large stocks, including Amazon and Google. And what I want to do is establish how high I think this bear market rally could take them. And then I want to sell a third of my shares up there. And then in anticipation of a downturn, buy back in at what I think is going to be the bottom of the market. So it's a strategy to make money in a bad time, even for a long-term investor. And that's what this video is about. It's not financial advice. I don't expect you to do what I'm doing or to use my numbers. What I expect you to do is think about it and think, does that make sense? And do some research on it and determine, is this in fact what I think is going to happen? And I can substantiate it with the research that I'm going to do. Now, I'm going to take you into my trading views and show you exactly how I came to the conclusion of the prices of where I was going to sell my Amazon and Google, and then where I was going to buy back in. So that's what this is all about. And again, I find trading views just an essential tool in my toolbox. You'll find a link in the description to all the tools that I use. And I found another one that I'm going to tell you about later this next week that I think can be invaluable for you as well. So, not financial advice, financial education, and subscribe.
Best of Us Investors presents Kerry Griegmeyer.
To give you an idea what I believe is going to happen, and let's use Amazon as an example. I think it's around $102 a share right now. It's up a little more today. I think it'll go to $135. It may go higher, and my Fibonacci analysis says it will go higher, but I'd be comfortable at 135, and that's where I would sell my shares. And then I think after the earnings season, because I think there's going to be some disappointment in earnings because, again, of inflation. So the cost of goods, even just cost of gasoline going up, is going to keep someone from going and buying a book on Amazon, or going and buying a blouse, or going and buying a discretionary purchase on Amazon, and that's going to hurt their earnings. And so I suspect that's been going on since we saw the increase in gas prices. So I think Amazon sales are going to be down, and I think their earnings are going to be down. So that's how I justify that it will turn and go down to 92. But let me explain that, and let me explain the Fibonacci by using my trading views charts, and let me take you over here to the computer. This is a trading views chart on Amazon. And as I said, I want to sell some of my Amazon into this bear market rally, and I need to create a strategy. And what I'm going to use as my strategy is based on what is called a Fibonacci replacement. On my trading views, if I click on this bar here, I get this. And what I do is then enter a point on this little jagged line of a rally point. In other words, this is the lowest Amazon got the corona crisis. And then the high it got was here in July of 2021. So what Fibonacci says is that a stock historically will retrace its surge, and it will retrace it usually to a 50% retracement and potentially as high as a 78% retracement. And as you can see, that's exactly what Amazon has done. The 50% retracement would have brought it from here, it was at about 190, would have brought it to 135. And it came to 135, and it went beyond it. And in fact, it went to the 78, and look how close it came to just tapping the 178. We had some intraday trades. Well, this was weekly trades, but it right here closed on it, or actually opened on it. So it's a good tool to give you some idea as to what in fact will happen. So what I'm saying is I'm going to reverse that. I believe we're going to have a bear market rally, and I believe we have started it. And I'm retracing my Fibonacci from its high of November 22nd, 2021 to its low here of June 13th, 2022. And I'm saying if Fibonacci is right, it is going to come up to 144. And if it is overwhelmingly right, it'll come up to about 169. I'm not going to count on that. I'm not going to get greedy, I guess is the way I would say it. I would sell 1/3 of my Amazon stock at this point. I own about $65,000 worth, so I would sell 200 shares at 135 in anticipation that it is going to come down. In anticipation its earnings are going to be disappointing, in anticipation that the bear market will continue all around the war in Russia and Ukraine, the interest rates, the price of gasoline, the continuing effects of inflation. So I see Amazon coming roughly down to somewhere around 92. And that's where I would buy back into Amazon at $92 a share. That would give me a net gain. And first of all, what it would do is it would reduce my cost basis in Amazon by $8,600 on those 200 shares that I sold up here and bought back down here. Okay? So that's the concept. The other stock I'm going to do something or do exactly the same thing on is that of Google. And here again, I have a Fibonacci retracement that said that Google would come down to 2052, and I'll be darned if it didn't just touch it exactly in 2052. Then if I go over here and do my Fibonacci and then reverse the thing, it says to me that I should sell when this bear market rally brings Google up to 2450. That would be about right there. I'm not relying on it hitting the 2538 that Fibonacci says a 50% retracement. I'm going to sell 1/3 of my shares, that would be 9 shares, at 2450. What I then think is going to happen as we get into the earnings, I think they will be disappointing, and I will buy back those same 9 shares at 2,000. That would be right about there. So I believe that's where that will be the low after the earnings report at near the end of July, and that's where I'd buy it back. That will net me a reduction in my cost basis of $4,000 $50. If we put those two together, my benefit is going to be $12,600 if I'm right in the strategy. And I'm not really worried about it if I'm wrong and I sell at the higher price and they continue to go up. Okay, I'm going to own these stocks for the next 10 years. But I see an opportunity with little risk on the downside for me. So that's how I want to do it. Then I want to evaluate my other holdings and come to a conclusion. Do I want to do something similar with some of them? And let's talk a little bit more about that. Okay, that's my strategy on both Amazon and Google. As I say, what it's going to do is reduce my cost basis in those stocks and end up giving me a gain if I buy back the same number of shares of about $12,600 that then I can spend elsewhere because we'll be at what I believe is the bottom, and that might be a good time to buy some of my genome therapy and genome editing stocks because they're, as I see what's happening in the market today, they are starting to get some recognition, and that's where my big bet is. That's where I think I'm going to get the exponential growth. Now, the other thing I'm going to do, I have sizable holdings also in Microsoft and NVIDIA. So I think, and Apple. So I will basically come up with a similar strategy to what I just showed you in Amazon and Google for NVIDIA, Apple, and Microsoft. And I'll share that on my Discord with my Discord members. And when I, in fact, do these trades, the 600 shares of Amazon and the 28 shares of Google, I will notify the members of my Patreon, the members of my tribe, through a text message. So they will see, and if you will go to the link in the description and become a member of our Patreon, you'll find that I basically tell people when I'm doing things as I'm doing them, and then share my whole portfolio there so you can get an idea of what works and what doesn't work. And I'll be the first to admit some of my genome sequencing and genome editing stocks have not worked as I thought they would because I got in too early. Now they're very depressed. Some of them are gaining strength, and you can be aware of that just by watching the news. And you will see that the news reporters are now talking about this doctor had success with helping this lady eliminate this blood disorder that is caused by a genomic mutation. And so as those things happen, as these companies report on their successes and their failures, these stocks are going to get more attention, and they will be, as I said in a previous video, much as the interest in flying had many years of trial and error until Wilbur and Orville Wright figured out how to get the airplane up, and now we're talking about putting people colonizing Mars. This will happen. I have no doubt it will happen. But the reality is it will take some time. But I think we're at the threshold of that time. And I think that because we have a catalyst. We have the biggest event in the world, the biggest event that's going to change our world more than anything that has happened in the past, and that was March 2020 coronavirus. The world is about to change, and I'm going to do a video that is going to share with you this is the beginning of the end, and some people are going to, some countries, some civilizations are going to be devastated. We have gone through a a period of prosperity that has never been equaled in the past worldwide and will probably never be equaled in the future as a result of about 3 things that people have done wrong. And one of them is making enough babies to support your economy. The biggest mistake China made was that one-child policy. And in the next 5 years, they're going to pay for it. And that I'll do a video on. I think that's my next video. So this is an exciting time. This is what I enjoy doing. I enjoy working with other people. Most of my ideas come from my tribe. My individuals who follow me, who we talk every Friday, that'll be tomorrow, and we discuss what's happening in the market. It's like I say, this should be a team sport. If you're trying to play against Wall Street by yourself with the superficial help of talking heads like me and people on Squawk Box and CNBC, you're going to lose. You're going to lose because you need team support. That's what a Discord provides. Whether you come to my Discord or someone else's, find somebody that you identify with, that you have common goals and common objectives. And when you go to their Discord, you'll find people just like them. And that's where you can gain strength. That's where you can survive the hurricane. And we're in the middle of a hurricane. You're going to see a spot of light. You may see 2 or 3 of them before it's over. But you need to work at it as a team. All right. Not financial advice, financial education. And do me a favor. And do yourself a favor. And subscribe and give this a like. Give it a thumbs up. Ring the bell. Do all that comical stuff. And let's make some money together. Let's make some good financial decisions.